Welcome to our weekly investment update. It's Friday the 22nd of May. My name's Chris Marshall. I'm Head of Investment Strategy at Dragon Investment Managers and also sit on the investment committee for 75.3. So as we do in these weekly videos, it's a nice opportunity just to look back over the past few trading sessions and perhaps pull out some of the things which have been moving markets and where appropriate, just relate them back to some of the portfolios that we run for our clients. So as we kind of look to what's going on, of course, we're seeing this wave of very negative, very downbeat economic data, which we've been fully expecting and been talking about. This is kind of already been priced into markets. It's not causing a dramatic downtrend in markets, although it is starting to make investors just question, okay, well, how quickly do we rebound from here? So, for example, in the UK, we saw month-over-month retail sales dip 18% in April. We've seen the unemployment figures tick up in US. We've seen the initial jobless claims still come out in the millions, which historically are very, very significant. Although I would say that the trend is that we're seeing a reduction in the growth of initial jobless claims in the US. So these are signs that things are starting to get back into activity and into action and into productivity. But that, of course, we know and we were fully expecting that the real economy would be showing some real signs of stress and strain at this point, because they are, of course, directly related to government policy essentially shutting down economies. So with that, and with the governments also trying to prop up the economy, we're seeing some very large budget deficits. UK, of course, came out with its largest monthly budget deficit in history. It was 62.1 billion. And if we put this in comparison to the previous highest high, that was during the Great Financial Crisis, and that was only 22 billion. So we are seeing huge amounts of debt coming through, because governments, of course, are if they're going to enact policy which stops people working, then they have a moral obligation, you could say, to also prop up that economy which they are causing to be paralysed. If we look to what this has kind of done in the markets, how it's performed, certainly if we start with equity markets, we saw a very, very positive start to the week, and this was really based off the stories of reopenings within Europe and also within the US. States, a lot of them either in a state of reopening or planning to in the next few days. We saw an uptick in oil, which was reflective of this movement of people and transportation coming back online, and really kind of telling that story in a number format. And so this had a very positive effect. We also saw some stories around phase 1 trials of vaccines and such like, and all these things helped to give investors a little bit more confidence about what was going on. As we came into Wednesday, some of the markets around the world were actually posting 10-week highs, so a very significant point. And then we've seen this drifting since then, really, a few sale days. Really, as kind of the tables turned a little bit and the focus suddenly became back on US, China, and some of the rhetoric that Trump is coming out with, not only around trade wars, which of course we've been talking about really for months and months, although they are back on the table now. We've also got the viral side of things. Trump, partly probably as an election play, wanting to shift blame of how he's handled coronavirus from the US and himself to, of course, if you can blame somebody else for it, then that's a great way to do it, and he's certainly using the media for that purpose. And really that risk-off play, so investors just becoming a little bit more sceptical as we came into the back of the week, has been reflected in the yields on government bonds. Certainly we've seen yields come down slightly as the capital has appreciated. This also being picked up in surveys such as that run by the American Association of Individual Investors, who run what we call a bull and bear ratio survey. And so these things are having, we can see the effect of this uncertainty coming through. Now, within the government bond space, we have seen a couple of landmark issuance, if you like. So US issued, for the first time since 1986, a 20-year government bond. It was well received by markets, and this was really one way that the US government can push out the maturity of some of the borrowing it's having to do right now, rather than just issuing very short-dated paper. And if we look to the UK, of course, we had this very significant, this all-time first of the UK government issuing debt at a negative yield. Now, it wasn't significantly negative, but it is a view of the marketplace really saying, well, okay, we would potentially expect the Bank of England to go into negative rate territory. They've said that they won't. They've said that it's not a policy they're looking to enact at this point. But it is the market's view of potentially what tools the Bank of England could use should we see a slow recovery out from this. So all in all, we're seeing some positive shoots. We're seeing those green shoots. They are from very low bases, but if we look to more high frequency data, that's data that comes out on a much more regular basis than government data, then we are starting to see more mobility of people, which is really the catalyst for people actually being able to get back to work and productivity, and companies being able to actually find cash flows again. So turning to how portfolios have fared, we have seen volatility certainly come down since those very, very volatile months between the middle of Feb and kind of the middle of March. That's when we saw that massive sell-off, and then of course we saw volatility on the upside coming out of that. So as things have settled down there, and they're performing in line with as we would want and expect. So overall, it's been a pretty positive week, even if sentiment has fallen off as we've come towards the Friday session. So all in all, I think from myself and all my colleagues at 75.3, that kind of wraps up this week's markets, and it just leaves me to say we wish you a very healthy and happy weekend, and we will see you back for another week's update next Friday.